Well, happy Monday morning. Thanks for joining us here at RFD TV. This is Market Day Report, and I am the Cow Guy here to give you what we had happening overnight. Why don't we take a look and see how those prices were, right? Let's go right to the corn and see. I tell you what, spoiler alert, it was pretty good, right? We'll take it. Let's take a look at corn, see what that corn table had for us. And it was a little bit better here, about 4 to 5 cents better. I'm going to say that. SEP's up 3 3/4, 3.94 1/4 was last there. The new crop D's was up 4 1/4 cents to 4.09. You know what? I mean, up 4 1/4 feels like it's up limit up, but 4.09 is still not good enough for me, folks, which is still 3 cents off the high of the day. So I guess I should be happier, but I'll take it. 4.09 is last in D's corn. Let's go to the beans and see what's going on there. Let's go. SEP's up 14 cents to 10.50 3/4. New crop's up 16 cents to 10.52 1/4. So there you go. Right around that 10.50 mark for both SEP and Nove. Nove's 10.52 1/4 last, up 16 1/4 cents. So that's okay. Let's take a look at wheat in Chicago, the Chicago wheat market. This is lagging. SEP's up a half cent, 2 ticks to 5.43 1/4 overnight, and Dees was up a penny to 5.69. That's right. So we're up anywhere between 1/4 to 1 cent across the board when it comes to Chicago wheat. Let's go to the hard red in Kansas City, and that's the opposite. We're anywhere between a half cent lower to 2 cents lower. SEP's off a penny to 5.69 even. Well, March is off half cent to 5.99 1/4. Lost the 6 handle there. That's hard red Kansas City. Let's move over to the spring wheat and see what that's got in store for us. That's some up arrows there finally. SEP up 5 3/4 cents to 6.15 1/2. Still well off the highs by 6 1/2 cents. Go out to the March, that's up 4 1/2 cents to 6.49 3/4. And again, that's almost 6 1/2 cents off the highs as well. That's spring wheat in Minneapolis. Let's take a look at cotton. We'll get to our guest analyst to open up the show. Cotton's up 43 points in Dees. That's the new crop. 71.13 is last there. And just a dime off, or 10 points. I can't say a dime. Just 10 points off the high of the day there. All right, let's bring him in. Brian Hoops, he's with Midwest Market Solutions, and he is the president there. Thank you very much for joining us here on a Monday morning. What is top of mind? The floor is yours, sir.
Good morning. I was in Kansas City, as you know, at the RJO Brokers Conference. Talked to a lot of people there. A lot of people loving RFD TV, from what I hear. So they like the Cow Guy. They love RFD, all the news, all the weather, all the markets. So.
I'll pay you later. Thank you.
There you go. So, we've seen a little bit of a bounce here in the grains the last several days. It was led by wheat. Overnight, it was led by soybeans. There's some talk that maybe China's going to start improving their purchases of soybeans. Everybody kind of gets excited when they made a private sale announcement last week, and it was China starting to buy some beans. But, typically this time of year, they start to buy and they continue to buy going into our harvest low. So this is just typical what China does. They're not going to become an aggressive buyer anytime soon. In fact, you look at what China bought during the month of June, it was about 11 million tons. And out of that 11 million, 9.7 million tons was from Brazil. They only bought 1.3 from the U.S. And so far from January through June, they have bought over 34 million tons of soybeans from Brazil and only 12 from the U.S. And that pattern is not going to change anytime soon. They're going to continue to buy beans from Brazil. They have to kind of meet their windows of after the planting season from Brazil. When that harvest starts, there's a little bit of a lag there. That's when they need to fill in some purchases for the U.S. And then again, during this time of the year, where they fill in after the South American harvest and they start running a little short. So we're not going to see, I don't think, a big uptick in that market. What I'm most concerned about is this weather that looks so good that we are going to see yield increases starting in August, probably in the corn market, maybe a 1%, 2% jump in that corn yield. And you're going to start seeing a break out of this trading range that we're in to the downside, I'm afraid.
A little of the research I read this morning said that, they wanted to chalk up the higher prices of beans and corn right now to hot weather. But I mean, I just kind of feel like hot weather would be good for some of the crop. What do you think?
Here in the U.S., it would be great. Yeah, I think exactly that. You have really hot weather in Canada. That could be affecting the canola crop, should maybe be a little supportive to soybean oil. But here in the U.S., as you mentioned, it's going to speed along the spring wheat harvest, winter wheat harvest out in the Pacific Northwest that's being shipped out. That would, certainly hot weather there would help things out and would help the maturity of the corn and the soybean crops. There's a lot of places that could use a little bit more heat units, and I don't think that's a detriment whatsoever if we see any heat.
So you're of the ilk that this probably won't scare into the funds out of their shorts right now?
Absolutely not. Yeah, they're not at the point where they're going to start covering things. In fact, typically in the third quarter they build their shorts, and so I know people are talking about, oh, the funds are a record short or close to record short. I don't know that that's a reason that they're going to cover. I think they probably build those shorts. We may see a new record built by September.
I think you're exactly right. And the problem is that I see is that one, it's a standoff, and the farmers the long and the funds are the short, but the funds can afford to stay in there probably longer than the farmer can, because they got to start moving some grain here, at least the on-farm storage stuff, right? So that's going to weigh on prices too, just naturally, just because of the calendar, correct?
Yeah, I would think so. A lot of crop needs to be swept out of the bin. Some farmers are fortunate they don't have to; they can hold on to it. But at some point, crop needs to be moved, and the industry knows that. And when that hits the market, it's going to hurt the basis. So there's pretty tight basis, especially in the Western Corn Belt. If you're out in that area, it's a good time to make those cash sales. Take a tight basis, take your cash, pay off some loans, whatever. If you want to be bullish, you can buy some September calls, October calls, something like that. At least take you into harvest and see where this crop lies, how big it is.
That sounds good to me. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Brian Hoops. He's with Midwest Market Solutions. He's the president down there. We'll be right back after this. All right, welcome back. Let's talk about what we saw happening in the livestock on Friday. Again, I don't know how they did it, but the livestock guys don't have to trade over the weekend, or at least on Sunday nights. So good luck. Good for them. I'm jealous, but let's see where we ended up today. All right, let's look at the live cattle board. It was mixed. We had the front two up, the backs all easier, but nothing more than, say, 85 cents. August live cattle finished up 85 cents to 183.10. And we lost real estate as you went back to, say, even Feb. That was down 52 cents to 186.65 on the close on Friday. So that's your live cattle board. Let's take a look at the feeder cattle. 62 cents lower in the August feeders, 255.60. And we lost about $1 and change across the board going out the deferreds. Let's go out to Nova. That was down $1.15 to 255.37. But if you look, the front four are all around with the handle at 255. So that's interesting to me. Let's take a look and see what we have happening with the lean hogs on Friday. What did that look like? And it will slowly but surely populate when then we might have a technical issue. All right, let's try it again one more time. Nope, let's bring Brian back in here. Brian, thanks for sticking around. All right, what are your thoughts? I mean, we all worry about the consumer, but retail sales number was at least in line with inflation. Maybe not expectations. It beat expectations, but who knows what's going to happen there. But we have some pretty high prices, and seeing what we've seen, I don't know, at the end of last year, these guys should be taking some protection, shouldn't they?
Yeah, absolutely. I think so. We've been talking about that for a while. These price levels that we're at, it's, a lot of times it's profitable for these producers at this point in time. Lock in those profits by buying some puts, maybe selling some calls to help pay for that. Gives you kind of a window or a fence to make decent money on these cattle. So it's a great strategy to use. There's a cattle on feed out on Friday that we should probably talk about. It was a little bit friendly. I wouldn't say bullish, but somewhat friendly because placements came in way below expectations at 93%. That's the lowest in the last 8 years. And so we should get a little bit of a bounce out of this cattle market because of that report. On feed supplies, very close to estimates, about 100.5%. So very similar to last year. Marketings, however, it was a 9-year low. Producers, and it's not so much the producers, it's the packers kind of slowing kill speeds a little bit. They are having a tough time moving those boxes, and that goes back to what you said. If the packers are having a tough time moving these meats at these price levels, we're going to cure that by probably moving to lower price levels at some point, and that's going to hurt the feeder out there.
That's good old supply and demand. Adam Smith, thank you very much. All right, great stuff. Brian Hoops, Midwest Market Solutions. He's the president there. Going to bring it back over to Nashville Music Row and say good morning to Tammy.
Good morning. Happy Monday.
All ready to go.
To see how
in the
these
saddle.
markets,
Buckle up.